G'day legends, and welcome back to the Gold Jumper channel for your latest market update. Jump up and under, let's get into it. Today we are breaking down the absolute chaos in the gold markets from March 15th to March 17th, 2026. We are looking at the Iran war impact, the surging price of oil, and the Reserve Bank of Australia's massive interest rate decision. We will also dive into the technical charts and see why the big money investors are still stacking despite the volatility. Just a quick disclaimer for all you traders out there. This content is for entertainment and education only, not financial advice. Now for the big question of the day. Is the dip below $5,000 the ultimate buying opportunity before a moon mission? Let us know your thoughts in the comments, and make sure to smash that like button and subscribe for more Ripper content. We start with some heavy breaking news that has been rocking the globe over the last 48 hours. The conflict in the Middle East reached a boiling point after Operation Epic Fury targeted Iranian export hubs on Karg Island. With the Strait of Hormuz effectively closed, 20% of the world's oil supply is currently deadlocked in the water. This geopolitical shock sent gold spiking early on, but things took a strange turn as the week progressed. On Monday, March 16th, we saw a massive paper market flush that caught many retail traders off guard. Even though the world is on fire, gold dipped to around $4,994 per ounce, reflecting short-term market volatility. This wasn't because people stopped liking gold, but because big institutions were hit with margin calls in other sectors. Traders were forced to sell their yellow gold to cover losses in energy and tech, creating a temporary liquidity trap. But don't sweat the dip, just more room in the pouch, because the physical demand remains chock-a-block. While paper prices fell, the premiums for actual gold bars and coins stayed sky-high across the globe. This decoupling shows that while the screens look red, the smart money is still holding on to the real stuff. It is a classic case of the paper market noise, trying to distract you from the long-term structural bull run. Moving over to the macro side, it has been a massive week for central banks in the US, Europe, and Asia. The US dollar index, or the DXY, has been pushing higher toward the 100.10 level. A stronger dollar usually acts as a headwind for gold, making it more expensive for international legends to buy. Over in Europe, Brent crude oil surged past $100 a barrel, sparking massive fears of stagflation. This means we have slowing growth mixed with rising prices, which is historically the sweet spot for gold performance. In Japan, the yen has been sliding toward 159 against the dollar, the lowest in years. The Bank of Japan is holding steady for now, but everyone is watching for a sudden pivot in their policy. Meanwhile, China continues to be a massive player, quietly stacking gold to diversify away from US treasuries. Their property market is still struggling, with investment down 19%, making gold a preferred sanctuary. All these global moving parts are creating a perfect storm for precious metals as we head deeper into 2026. Now let's talk about the big news from our own backyard here in Australia on Tuesday, March 17th. The Reserve Bank of Australia just handed down its interest rate decision, and it was a bit of a stinger. Governor Bullock and the board officially raised the cash rate by 25 basis points to 4.10%, the highest level in a year, sending a strong signal that the RBA is serious about quelling sticky inflation. The central bank is particularly focused on energy-driven inflation flowing through from the Middle East conflict and surging global oil prices. Even with the rate hike confirmed, the AUD/USD is holding near 0.705 as traders price in the potential for further increases in May. For all you gold legends, higher rates can sometimes be a bit of a drag, but with geopolitical tension and oil markets still sizzling, gold remains a shiny safe haven to watch. It's currently hovering around the 0.70 handle as traders price in even more hikes for May. For us gold bugs, higher rates can sometimes be a drag, but the war risk is currently the dominant driver. The Aussie market is showing that we have limited tolerance for upside pressure on prices right now. It's a tough balancing act, and it's keeping our local traders on their toes as the volatility ramps up. Speaking of volatility, we have to look at the unholy trinity of oil, the OVX and the dollar. West Texas Intermediate Oil, or WTI, is currently trading around $97.07. The oil volatility index, known as the OVX, spiked to 121, which are levels we haven't seen since the pandemic. When the OVX is that high, it means the energy markets are absolutely frantic. which usually helps gold's safe haven appeal. The US dollar index, the DXY, fell slightly on Monday to 99.83 but remains very strong. This tug of war between a strong dollar and high oil is what's keeping gold in this consolidation range. If oil stays above $100, it could add nearly 0.8% to global inflation. That kind of pressure is exactly why de-dollarization is picking up speed among the BRICS nations. They are looking for alternative payment systems to bypass the dollar and the SWIFT infrastructure. Gold is the strategic reserve asset of choice for these nations as they move toward a multipolar world. Now, let's check in with what the legendary investors are saying about this wild price action. The billionaire Ray Dalio was recently in Dubai, and he didn't pull any punches regarding the yellow metal. Dalio calls gold the safest money and views it as an investment necessity in this capital war era. He recommends legends keep 5 to 15% of their portfolio in gold to hedge against debt cycles. Then we have Peter Schiff, who is basically doing a victory lap as gold tests these massive levels. Schiff thinks the recent drop below 5,000 was just exaggerated panic and a great entry point. He even launched a new gold tokenization app to let you carry vaulted metal on your phone. This caused a bit of a dust-up on social media with the Binance founder, who called it a "trust me bro" token. Regardless of the drama, gold-backed tokens have hit a market cap of over $4 billion. It shows that people want the security of gold, but with the speed of the blockchain, which is pretty fair dinkum. Let's head over to the forums and see what the legends on Wall Street Bets are yarning about. The sentiment is a bit of a mixed bag, with some calling gold their sanctuary during the tech bloodbath. One user mentioned they finally piled into gold because they are sick of the taco trade failing them. For those who don't know, the taco trade is what they call leveraged tech bets that have been getting smashed. There's a lot of talk about margin calls, forcing people to sell what they want to keep. Retail traders are watching ExxonMobil hit all-time highs, while airlines are bleeding out from fuel costs. The stackers on Reddit are staying calm, reminding everyone that the paper market is just a distraction. They are looking at the $36 trillion of US debt and realizing that the dollar has a long-term problem. It's all about staying active and legendary while the weak hands get shaken out of their positions. Many are eyeing the $5,000 level as a massive psychological flaw that needs to hold. Now, let's get into the nitty-gritty with a deep dive into the technical analysis and the latest indicators. We are looking at the charts as of March 17th, and the levels are looking very interesting. On the 1-hour chart, gold spot is trading around $5,010 per ounce, reflecting consolidation after recent market swings. The death cross we saw earlier on the 1-hour chart has kept the short-term bias a bit bearish. This happened when the short-term moving average slipped below the longer-term average, triggering sell signals. However, we are seeing a Morningstar doji pattern forming near the $5,000 support. For you chart nerds, that is often a sign that a bullish reversal might be just around the corner. The Relative Strength Index, or the RSI, on the 1-hour chart is currently sitting at 48.8. That is pretty neutral, meaning the market isn't overbought or oversold, so there's room to move either way. Our immediate support, or the floor, is sitting at $4,988. If we break below that, we could see a quick slide down to $4,960. On the upside, we have resistance at $5,012, and then a bigger hurdle at $5,100. We need a clean break above $5,100 to get the bulls back in the driver's seat. Now, let's zoom out to the 4-hour chart to see the medium-term structure of the market. The 4-hour chart shows gold consolidating after that sharp corrective dip we saw on Monday. We are seeing a Bollinger Band squeeze on this time frame, which means volatility is currently very low. History tells us that these squeezes are usually the deep breath before a massive price explosion. The MACD indicator on the 4-hour is still slightly bearish at negative 10.33. This suggests that while the selling has slowed down, the buyers haven't fully taken control just yet. The 50-period exponential moving average, or the EMA, is acting as a bullish pivot at 5,136. If we can reclaim that level on the 4-hour, the road to 5,200 opens right up. Traders are looking for a change of character on these lower time frames to confirm the bottom is in. It's all about watching the liquidity pools above and below the current price for the next big move. Finally, let's look at the daily chart for the big picture of where this bull market is heading. The daily chart is still looking incredibly bullish for the long term, so there is no need to panic. Gold is holding well above its 50-day simple moving average, which is currently at 4,953. As long as we stay above that 50-day average, the structural uptrend is still very much intact. Even better, the 200-day average is way down at $4,111. That massive gap shows just how strong this bull run has been over the last 12 months. We are currently inside a symmetrical triangle formation on the daily, which usually breaks in the direction of the trend. Since the trend is up, the odds favor a breakout to the upside toward those old record highs. The daily RSI is at 40.7, which means we are far from being overbought on a macro scale. This gives gold plenty of fuel in the tank for the next leg higher if the news turns bullish. We also have a golden cross that occurred earlier this year that is still providing long-term support. That is when the 50-day average crossed above the 200-day, and it's a major buy the dip signal. Most analysts are targeting a recovery toward $5,595 by the middle of the year. Some big banks like JP Morgan are even calling for $6,300 by the end of 2026. So while the short-term charts are a bit messy, the daily outlook is looking solid as a rock. Key resistance levels to watch for the week ahead are 5,261 and 5,400. If we clear 5,400, we are looking at a clear run back to the all-time highs. On the downside, the absolute line in the sand is the 50-day average at 4,915. If we lose that, we might see a deeper correction, but for now, the buyers are defending the 5,000 mark. So to summarize the main points for all you legends who might have missed the start, gold is currently navigating a massive geopolitical shock with the Iran war and the Strait of Hormuz blockade. We saw a liquidity flush down to $4,969, but the price has stabilized. The Reserve Bank of Australia hiked rates to 4.0%, which has the local market buzzing. Oil and the dollar are in a tug-of-war, with WTI near $97 and the DXY near 100. Big names like Ray Dalio and Peter Schiff are telling investors to stay long and use the dips to accumulate. Technicals show a Bollinger Squeeze on the daily chart, hinting that a massive move is brewing. Support is firm at 5,000, while resistance is clustered around 5,100 and 5,200. It's been a wild few days, but the structural bull market for gold looks like it's just getting started. Now, back to our big question. Do you think gold breaks 5,300 before the end of the month? Drop your price targets in the comments below. I want to see which of you legends has the best crystal ball. Make sure to like the video and subscribe so you don't miss our next update on the Gold Jumper channel. Stay active, stay legendary, catch ya.